Have you ever been watching QQQ and just felt like you're missing something? Like there are these hidden forces just pulling the price around? Well, today we're going to decode one of the biggest ones, the GEX map. And I promise by the end of this, you have a whole new way of looking at the market and anticipating its next move.
I mean, seriously, think about it for a second. You're there, you're watching your chart, and the price just slams to a halt, reverses on a dime, or gets stuck in a range for what feels like forever. It really does feel like it's hitting these invisible barriers. Well, what if I told you they're not invisible at all? You just have to know where to look.
So what is it? What's really creating these super powerful levels that seem to control the price all day long? Is it just random market chaos? Or is there actually a hidden structure that we can map out and, use to our advantage?
The big reveal is, these walls are anything but random. They are the direct result of something called gamma exposure, or GEX for short. And once you learn how to read this map, oh man, you gain a massive edge because you start to understand why the market is moving the way it is.
Okay, so let's really dig in here. What exactly is this gamma exposure thing, and why does it have such a huge impact on price? So, at its heart, GEX is basically a map of where the big options dealers have to act. You see, dealers aren't like us. They're not trying to bet on which way the market's going to go. Their job is to stay neutral. They just want to make their money on the spread. And to do that, to protect themselves, they are constantly forced to buy and sell the underlying stock to hedge their risk. And it's that forced activity that creates these super predictable zones.
And how they hedge totally changes based on the market's mood. So for example, when everyone's feeling bullish and buying up tons of calls, the dealers are on the other side of that trade. That makes them short gamma. To stay neutral, they literally have to buy when the price drops and sell when it rises. This actually helps stabilize the market. But when fear kicks in and everybody rushes to buy puts, the dealers become long gamma. And now their hedging actually accelerates the moves. They start selling into weakness and buying into strength, which just cranks up the volatility.
And the result of all this forced buying and selling, you get these incredibly powerful gamma walls. Price levels with so much dealer activity concentrated there that the market is just drawn to them like a magnet.
And look, this concept is especially powerful for something like QQQ because of the sheer scale we're talking about. We are talking billions, with a B, billions of dollars in options flowing through QQQ every single day. And that means the dealer's positioning around these key strike prices becomes one of the most dominant forces controlling where the price goes intraday.
Okay, so that's the theory, that's the what and the why. But how do we actually turn this into a tool we can use? Let's build a simple GX map right now that you can put together in less than 5 minutes.
It really is this simple. First, you just pull up the data and find the strike prices that have the largest gamma exposure. Second, you find your walls. The biggest positive GX number, that's your support magnet. The biggest negative GX, that's your resistance. And third, and this one is absolutely crucial, you find that Zero-GEX line. That's the pivot. It's the level where dealers literally flip from suppressing volatility to fueling it. All right, so once you have this map in front of you, you're not just guessing anymore. You're no longer fighting the market's hidden currents. You can actually start trading with the dealer flow. Let's look at a couple of super clear scenarios. The game plan is pretty straightforward. For a bullish setup, you want to see the price trading above that Zero-GEX line. When it pulls back to a big positive gamma wall and holds, that's your signal to lean long. And on the flip side, for a bearish setup, you wait for the price to get below that zero line, rally up into a negative gamma wall, and get rejected. That's a super high probability spot to lean short.
But what about when a wall breaks? I mean, that's an incredibly powerful signal all on its own. When you see the price just smash through a major gamma wall, and there's real volume behind it, that's telling you a huge shift is happening. All of those dealer hedges have to be unwound like right now, which can pour gasoline on the fire and fuel a really strong sustained move in that direction. All right, you ready for a pro tip? This is how you can take this whole concept to the next level and spot the absolute A-plus top-tier setups. We call this the fortress level signal.
So what's the secret sauce? What's that magic ingredient that creates a level of support or resistance that's just almost unbreakable?
It's this incredibly powerful formula. When a major gamma wall lines up perfectly with the massive dark pool print, one of those huge private stock trades that happen off the public exchanges, you have just found what we call a fortress level.
And just think for a second about why this is so powerful. On one hand, you've got the options dealers who are forced to defend that price because of their hedges, and at the exact same time, you have huge institutions defending that same level because that's where they put on their massive off-exchange orders. When you get both of those giants defending the same zone, well, it creates one of the most reliable setups you'll probably ever find.
So let's kind of bring this all home. By understanding GEX, you're not just looking at a price chart anymore. You're actually looking at the hidden architecture of the market itself.
This is the big takeaway. Stop drawing random lines on your chart and just guessing where support and resistance might show up. You can now map the actual dealer flow that creates these levels, and you can start trading on the same side as the biggest players in the entire market.
You know, once you start seeing the market this way, you really can't unsee it. The question stops being where is the price going, and it becomes where are the dealers supposed to act next. So hey, if this explainer helped you see the market in a new light, do me a favor and subscribe to the channel, Elite Trading Radar, so you don't miss the next one. And I'd love to know, comment below, is this your first time hearing about GEX, or is this already part of your trading toolkit? And finally, as always, please remember this is all for educational purposes. Trading involves significant risk, so please do your own research. Thanks for watching.